Now, the average 5-year fixed mortgage rate has fallen back below the 6% mark for the first time today since July.
Well, that's according to the financial information website Money Facts, but I can do a little better for you because mortgage brokers are saying actually you can get below 5% now. At least 6 major lenders going below 5%. Virgin Money 4.82%. NatWest and HSBC 4.89%, but that's for a 5-year mortgage rate, so still a fixed rate. So slightly encouraging now for those trying to get onto the housing ladder.
Yes, encouraging. Is it good news for buyers as homes are being sold £12,000 below the average asking price? That's according to the property website Zoopla. So could buyers be tempted back into the property market? Well, joining us now is our business and economics editor Liam Halligan with On the Money.
So higher, lower.
Freeze!
Yeah.
Didn't he do well? That was wrong. That was Bruce.
No, yeah, OK.
Give us a 12 mark.
Yeah, cuddly toy. Yeah. No, it's interesting that obviously the mortgage market is trying to second-guess where the Bank of England is going. Significant to go below 6%. But as we say now, these deals out there, according to the brokers, below 5% as well.
Why is that? Because the Bank of England froze interest rates last week, of course. We were going to get a 15th successive raise, but actually the inflation number the day before was down. There was some good signs of wage pressures easing in the economy, strikes being solved and so on. And so the Bank of England kept rates where they were, and the mortgage market is forward-looking. If interest rates at 5.25% from the Bank of England are now the peak, by definition, if you've got a 5-year mortgage, later on in that mortgage, the Bank of England's rate is going to be much lower.
It's going to cost you.
And that's why, there's a lot of things in this country that aren't particularly competitive, right? A lot of rigging and fixing of markets. But the market for cash, if you're buying a house, is pretty competitive. So now you've got mortgage companies offering better rates for home buyers, and that will be felt when it comes to house prices and indeed what's happening to asking prices.
Yeah, and the figures is the latest evidence that people are starting to struggle with those higher mortgage costs that we've seen in the past year or so. The number of first-time buyers in the UK has fallen by a fifth, and it's homes that are in need of renovation that are most in demand. So it's people looking for cheaper housing, a bargain.
Let's have a look. So what we've got here, we've got some numbers from Zoopla. Now, Zoopla is a property information website, as you may know, and I've put some of the numbers in a graphic. So what Zoopla is saying is that on average, sellers are now dropping their asking prices by £12,000, and that's an average discount of 4.2%. So it is a buyer's market. Buyers can push for sellers to lower their prices. And why is this happening? Because higher interest rates are curtailing demand. You can't borrow as much money for the same given monthly outlay of a mortgage payment. So unless your wages go up, you can't borrow more. So that's sort of curtailing what buyers can afford to offer. And of course, as you say, we're getting fewer first-time buyers. Zoopla say that while the average discount is 4.2% on the asking price, and we know a lot of estate agents will jack up the asking price to get the instruction, Zoopla are saying that 1 in 10 sales that go through, the offer is dropped by more than 10%.
Wow.
So really, really chunky. So if you think the average house is like 280 grand, that's like 30 grand reduction.
Yeah. However, is there still a problem in that to get some of these mortgage deals particularly, you need still to have a pretty good deposit to put in? And people are finding that difficult to get that cash together, especially if they're coming from rental sector.
That's always been the difficulty, getting a deposit together if you are renting as well. And, people are spending a half of their incomes on rent. It's absolutely terrible. And so what we've got now is a situation where the market is starting to turn. We have seen a fall in house prices. It has been a buyer's market. As Ellie says, people are looking for bargains. They're looking for fixer-uppers, as they say in America, rather than the finished object. And it may be, if the interest rate does peak here, then the housing market will turn. One blot on the landscape, and I've said this before, if we have an inflation spike again this autumn and winter, particularly with the oil price...
I was going to say, that could be because of fuel.
The Bank of England will not be then talking about interest rates peaking. They'll be talking about interest rates possibly having to go up again.
Yeah.
And that, again, will have push-through implications on the housing market.
And I guess it's good to have liquidity, as they say in the housing market, things because people then go out and spend, they get the curtains, they get the furniture, whatever, and it feeds into the economy.
They do, but this is still a very slow market,
Right.
not least because buyers don't want to drop their prices and sellers are having trouble getting proper mortgage offers through. I mean, Zoopla is saying by the end of this year, the turnover in the housing market will be, they're predicting, a fifth lower than in 2022. So 20% fewer housing transactions with all those economic benefits and knock-ons that you talk about, Mark. This is what happens when you raise interest rates. It's not just companies find it hard to invest. It's not just consumers don't want to spend. It's also that people can't borrow enough money to buy
have a
houses,
home and a roof over their head.
So house prices start falling, which means everyone then panics, I'm not going to sell now. I could talk to a dozen people in the GB News newsroom who have been talking to me about this in terms of their own personal circumstances. Is this really the right time to sell your house when prices are falling? No, you're probably going to wait. And that's what's happening.
Liam, as ever, thanks for taking us through all that.
Thanks.
And latest figures, as I say, 4.82%. You heard it from me first.
Yeah, very good. Good journalist in you, Mark.